Good morning and welcome to this weekly market update from AGM Markets. Today is the, let's have a look, 22nd of October 2013. What I'm going to do today is go through some technical analysis on Euro dollar, cable dollar, Swiss dollar, CAD, the Aussie and gold. Basically just review what's been going on in the markets, look at some interesting setups and look at the levels which hopefully will be of use for this week going forward. We'll try not to dwell on the bigger time frames too much, but there are some interesting levels on the bigger time frames. We'll try and keep it shorter term focus, maybe the 4 hour, 1 hour, for some shorter interesting term setups. But we'll not make any trade calls recommendations in this video. You trade at your own risk. If you could please read a full disclaimer on our website, which is www.agmmarkets.com. For anyone who follows out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at the Euro chart. Let's flip it onto the weekly chart quickly because there is an interesting setup on here. And this is the setup which is in play. So it's from the 2012 low to the 2013 high, and we've spoken about this before. This sort of 50, but this is why we look at the 50% and 61.8% retracements on this video, because it's a decent sort of retracement zone. See it as a zone and not much as a level. I mean, sometimes you get some very nice reactions off the 50% to the pip. But this is a prime example here. Buyers are buying in between this sort of zone, and it has rotated higher, and now it looks like the high of this setup could get taken out this week. So that's around the just above 137 level. So that's the bigger term picture, I think. Also, I just want to double check actually this fib here. But this is an interesting setup here. Complete opposite sides here. We go from highs to lows. Perhaps be interesting to see if we get up to 61.8 here, what could happen here. But you can see we're testing these highs here to the left, which is coincidentally the high of that previous setup. So that's it in terms of the weekly. So it's all about these highs just above the 137. Will they get taken out? If they do get taken out, there is quite a lot of room to that upside. This is the Euro dollar chart on the daily. We've spoken about this lovely textbook setups from the lows to the highs. A perfect 50% fib to the pip. They're rotated higher and has taken out those stops towards the upside. You can just see it's very similar here in that previous chart. It's all about these highs. The yearly highs up here, which are at 130s, just above 137s. And in terms of daily closes, around 136.87 there, so it's trying to grind higher. I mean, the candle action is quite bullish. You see yesterday's daily candle already a little bit of a decent bit of wick there, lower wick, so it's trying to grind higher. I really would not be surprised to see stops get taken out towards the upside. Of course, you have to remember that non-farm payrolls is out today on a Tuesday. Normally it's out on a Friday. But of course we had the US government shutdown over the last few weeks, so keep an eye on that. It may not be as significant as normal, but it could be. It really could move the market. So you just have to play it by ear, really. Just let price dictate what to do, really. So this is another support level last week. Really nice support. That was at the 1.3468. Had some lovely candle action there. That's it. That's really it for Euro. I mean, if we do start to get a bit of further retracement, this will be a fib. If you want to look at it in the shorter term time frame, the 4 hour or even the 1 hour, this fib here from the lows to the highs. Also, in terms of the shorter term price action, yesterday there was a lovely bounce off of the 1.3650 level. You can see that pretty much there to the pip. So I mean, currently at the minute it's just all about it's 136.50 to the 137 handle. We're just chopping in between here. If you see it shorten, if you shorten up to the time frames there, we're just chopping in between this range at the minute. So it's looking for a breakout either side. I wouldn't be surprised to see it come back down, retrace a little bit more to a healthy retracement level, or again, there's nothing stopping it grinding higher and taking out these yearly highs. But if you look at the daily, and especially last week's weekly candle, very bullish indeed. So it looks like it will go up this week. It's just dependent on when, really. So definitely be an interesting one this week. Let's have a look at the cable. Let's have a look at the weekly chart. Quick look at the weekly, a nice bullish candle as well, big green candle, but of course there is a bit of upper wick here, and there's quite a bit of wick, that candle there as well. So there's some key resistance here, around the sort of 160, 180, 162s, and it is currently holding. So we may get a bit of a retracement this week. It may not be as bullish as the euro dollar this week. Let's have a look at the shorter term time frames. We've spoken about these fibs here before. So I mean, the dip buyers have been very good recently. That one there, lovely setup, and then we had this one here which popped up. So from that low there, didn't quite reach the 50%, but classic dip there, nice candle action. So this would have been the next one here, but it didn't retrace down to the 50%. But you can see clear support though. Lovely support that. Let's get rid of this fib. That sort of one spot 59.43s. Lovely wicks there. I mean, there's 5 candles that pierced below that level and closed above. So clear reversal candles there, and it has reversed higher. But you can see it is starting to stall at the minute. Yesterday's daily candle, a bearish one, so it could come back down again, maybe to this level, and then reverse higher, or it could come down to a healthier retracement level. And yes, the same on the 4 hour really. I'd personally be looking for buying opportunities at this level. I think it's a better one, but you will get a lot of people, I would have thought, looking at this fib here, from that low to that high there, so keep an eye on that. Dollar Swiss, last week's weekly candle, quite bearish, obviously the complete opposite of euro. There's been pretty much a mirror image chart, but it is pressing into key supports here. In fact, let's go back to this weekly. Key support is pretty much this level here. There's nice support around here to the left as well. So it's currently sitting above this sort of 89.95, we can call that. Keep it nice and simple and call it the 0.90 level. Probably a key option barrier as well, I would have thought. Daily chart, you can see that as well, some nice reaction already this last few days, from sort of Thursday, Friday and yesterday, and it's starting to hold, and yeah, you can see it's just starting to grind higher a bit. So if you move on to the 4 hour, you can use that as a level there, so just above the sort of 0.9012, and it's starting to grind higher. Sellers will be looking to cap it, I would have thought, at this fib here. So similar to Euro, we've drawn a short-term fib there from the low of the 1 hour chart to the high there, and vice versa on dollar Swiss. Fib from the highs to the lows. If we get up, then keep an eye on that 50%. And yeah, that's pretty much it really on the dollar Swiss. But there's key supports. Definitely, you can see that key candle action there. That 1 hour reversal yesterday, very nice indeed. And some nice reversal candles here as well. Dollar CAD. It's in a bit of no man's land really. I mean, we've had some nice, this trendline support sort of holding here. In fact, you can bring that on the weekly as well. And my chart needs to load up. The computer's been a bit slow this morning. There we go. So this is the weekly chart. This trendline here from the year low to high. If you want to draw them from the outside edges. Yeah, bear in mind my computer's been quite slow this morning. Yeah, so this trend on here from the low of the year to use 3 clear candlestick lows there. So if you draw it from that first one, you can see we're holding inside this currently on the weekly chart. So bear in mind that, although last week's weekly candle was quite bearish, but it did close inside, so I wouldn't be surprised to see a break of this week if we do get below here. It's all about the weekly candle close, to be honest. If it closes below this trend line, then we really could start to fall. And if you like the big weekly fib levels, then this one is an interesting one. which is currently holding the 50%. You can see that where we've spoken about that before. Lovely daily reversal candles there, nice lower wicks, we rotated higher. So currently it's just sitting above this trend line, really trying to grind higher. We had a daily candle closed yesterday above the 200-day moving average, so it could grind a little bit higher first, but it's not that convincing at the minute. In terms of shorter term charts, this 4 hour, I think this is the key fib here. Actually it's not a fib, let's just look at it as a support. So the key sort of short term support here on this 4 hours, the one spot 0282s here, it held around here and it's currently holding here, so that's the key sort of line in the sand, really, the key sort of bull bear line. If we get below that, then it could break this trend line. If it keeps on holding, then we could come up and take out these highs. There's a nice fib setup, I think this was last week, from these highs to lows here, held very nice. The 61.8 rotated towards the downside, so if we do start to grind higher, then this fib here could be in focus from that. So that's sort of that peak high to the low here. If we do grind higher, and keep an eye on that 50% line. Okay, that's dollar CAD. Then let's have a look at Aussie. Aussie's just been grinding higher. If you look at the weekly candle, extremely bullish there. It's grinding towards that 200-week moving average and the 50-week moving average. And what is really interesting, I think, is this fib here. So from that swing high of the year to the low of the year, we're getting very near this 50% line now. And also, if we just move it back to the daily with that fib still on the chart, you can see we have this 200-day moving average around here, around this level as well. So some key sort of confluence resistance there, but it's all about this big 50% level at 0.9712. It looks like it just wants to grind higher and hit this level, but that's the key setup in play for me. In terms of shorter term charts, there's not much in terms of fib ticks. There's not a clear swing low, I don't think. If I was looking at it for looking for a new buying opportunity, I'll probably use this low here on the 4 hour. That's the most obvious, but it's not a great one. Or you can look at the trend line as well, which is still in play. That'll probably be what I do. But yeah, in terms of the Aussie, I'm more interested in the selling opportunity, I think, at this big 50% level. Keep an eye on the price action there, but of course this trend line is holding, so keep an eye on that as well, and that's valid for all the time frames, really. I don't think the 1 hour's been that clear. It's just been grinding higher, really. I mean, there's lots of mini supports. You just look at the candle, look at the wicks, really. That's a nice support there, and you can see this is the current support here, which is holding. So in terms of the shorter term time frames, that's all you need to look at, really. Nice support here on the 1 hour. Just look at the wicks, really. It's the way to play it. And a nice reversal candle there, rotated higher. Lovely reversal candles here, rotated higher, and a nice little reversal candle there, Gravestone Doji, and it's popped higher. So that's the way to play Aussie, it looks like. That's the forex done. Let's have a look at the gold. The gold, it's still the same sort of setup. We spoke about this fib from the lows to the highs here. It firstly held the 50% here, got a bit of a pop, and it came back down 61.8, and it got a bit of a bounce. And I thought if perhaps we add the 78.6 or 76.4, then this may be the level that's holding. No, it's not. It's below that, so it's just playing it in terms of a key support here. The key support here is the 1270 level, which has been holding. But you can see trendline resistance we got here as well. That's capping it. Trendline resistance capping it, and this 100-day moving average as well. So it's in a bit of no man's land, really. Just got to keep an eye on this support. There's a nice support around here to the left as well, which held. And now it's just getting trapped at this resistance here. It's just short-term resistance, forming a bit of a double top there, and trendline resistance as well. So it could come back down. It looks like it's going to come back down to this support. So keep an eye on that, but not a massively interesting chart in terms of the technicals. But of course there is nice candles. If you look at the shorter term time frames, just look at the wicks here. Some lovely wicks down here on the 4 hour, nice support there, and up here some big upper wicks off the 200 SMA, and it's starting to rotate to the downside. And look around here as well, clear price action there, decent lower wicks off of a nice support, and it's rotated higher. So that's the way to play gold this week, it looks like. Okay, then that's all for today. Hope you found this video useful. If there's any other pairs that you want to have a look at next week, then feel free to comment under the YouTube video, which I'll post up on our YouTube channel, which is AGM Markets, or feel free to comment on our Twitter feed, which is at AGM Markets as well. Hope you have a great rest of the week trading. Keep an eye out on the news feed, because there is lots of data coming out this week, especially with NFP today. So keep an eye on that. It should be quite volatile. Should be some decent opportunities out there. Okay, have a great rest of the week trading. I'll catch you next week. Thanks for watching.